Hello and welcome to my channel. Today we are going to be talking about risk management in trading, the almighty risk management. If you have been trading and you have not been applying risk management, this video is for you. So you need to sit tight and learn how to easily apply risk management to every trade you take. By the way, if you have not subscribed to this channel, you want to go now, click on the subscribe button, subscribe to the channel, and click on the notification button as well so that you can get notified every time I share videos like this one. Okay, so risk management. How can you apply risk management to your trades? Let's talk about the importance of risk management first. Why is it very important for you to manage your risk as a trader? The first thing you want to know is that the foreign exchange market is the largest financial market in the world. Some months back, I did an analysis. I analyzed what the market does every day, and I compared that with the richest man in the world. As at that time, Jeff Bezos. I compared his net worth with what the market does daily, because the market does an average of about $6 trillion per day. Now, comparing that with what the entire net worth of the richest man in the world, he needed to multiply his net worth for over 140 times before he can equate what the market does in a day. What does that mean? It means that even that richest man cannot control the market. So that means that you too cannot control the market. Just imagine you are trading with $1,000 account, $100 account, $200 account, and you want to control the market. You think because you've done a buy, the market should begin going bullish and going your way. No, it doesn't work that way, my friend. So what do? Understanding that you don't have control over the market, and the market can change direction at any time, means that what looks positive can turn negative in a very short time. So you have to manage that risk. And how do you manage your risk? Now, I'm going to give you some tips on risk management, and I'm also going to add a little bit of money management, okay? So, have you ever seen where people take trades and then you see Euro USD like 10 times? They trade the same currency pair, like several positions at the same time. Now, while it is not like bad in itself, having several positions on the same currency pair going on at the same time, you can do that only if you've analyzed your risk management and you're risking, for instance, 5% per trade. You're taking 5 trades, and each of these trades you're risking just 1%. So the 5 equates the 5% you're risking. Okay, but what people do not understand is that if the pair changes direction, it's going to affect all of them. So if your risk per trade is 3%, it is advisable, by the way, that you don't risk more than 3% per trade, especially with someone who trades small account. Okay, if you trade very large accounts, you can even do as little as 0.5 or 1% risk per trade. It is advisable you don't risk more than 3% per trade. What that means is that you can take one position on one currency pair at a time for that 3%. Instead of you taking 10 of that, if you take 3% risk on a trade and you take it 10 times, do you know what you've done? You are risking 30% and not 3% anymore. And if that trade goes against you, 30% of your trade is gone. Now that is even for someone who places stop loss. Some people trade without stop loss. So another thing you want to have in mind is stop loss. You must always place stop loss on your trade. It's very important. I don't care what you've heard from so-called Forex guru. Stop loss is very important, no matter how much you sit in front of your computer, because you can control the direction of the market. So set stop loss regularly, and you also want to ensure that you take care of currency correlation. Some currency pairs are highly correlated together. So you don't want to take currency pair from the same zone, all of them together at the same time. You may be risking more than you should. Another thing, so I mentioned a little bit of money management the other time, is you want to calculate your lot size for every trade you take. You can't just decide, I want to use 1.0 lot size. You should calculate your lot size. So don't forget, those are the few points I have for you today. So I mentioned about 4 things there. I mentioned not taking too many positions on the same currency pair at the same time. So for me, what do I do? I also take multiple trades sometimes, but not immediately at the same time. What I do is I let the trade run, and then when I see another entry opportunity after the initial trade has become risk-free, then I can add more trades. The second tip I mentioned is always setting stop loss. Always ensure that you set stop loss. The third is that you want to take care of currency correlation, because many currencies are correlated, highly correlated together. So when you take all of them at the same time, what is happening to one currency may affect the other currency, especially if they are from the same zone. Okay, and then I mentioned that you should always calculate your lot size. Always calculate your lot size. Don't just choose lot size as your desire. Okay, so thank you very much for being a part of this. I will be back to give you more interesting video and training tips like this. But before then, remember to subscribe to this channel. And if you would like to learn how to trade professionally, you want to take up a training course, please reach out or go below and click on the link I share below so that you can learn more about the different training program that I offer. I also have for you a training video, a free training video where I talk about the ultimate forex trading profit hack. Okay, so you can watch the video free. And if you want to take a course, please reach out on the WhatsApp number that I share down there below. Take care and have a great day.